WA. Also cleared my CFA level 2. This might be my maybe 21st year of teaching. And yeah, that's it. So we'll continue with the subject. I think that's sufficient to know. And this will be an interactive session. Um, I would like to know you over a period of time. We'll discuss concepts. Yeah, over a period of time, we'll discuss concepts, discuss methods, and it'll be a fun session. So let's start with the journey. All right, dears. Um, Guys, I'm sure you have access to the material, the slides, the IQS slides.
Yes, sir.
Yes, sir. All right.
Yes, sir.
So this is our chapter 1 for the day. Okay. And if you wish to, just give me 1 minute. I'll just give you a brief of the whole subject. Give me a minute. Yep. So MSc, as you may see on screen, yours is a 100-mark subject. The IFOA subject CV1 at IQS, we have made it a 100-mark subject, business finance. The unit 1 consists basics of finance, a chapter for the day. All right. Costo, Bria, Tom. All right. Then
Yes.
then
Yes.
once we understand the basics of the subject, the basics of the subject will be, when you are learning this subject, what's the viewpoint? So ideally, your point of view is of a CFO, the chief financial officer of the company, the person who is appointed with only one objective, that is wealth maximization of the investor, of the shareholder. Wealth maximization of the shareholder. So the first sessions is primarily about trying to understand who are your stakeholders, what do they expect from you, who is a shareholder, what does he expect from you, correct? Over a period of time, we'll understand that yes, the work of a CFO is earnings maximization, profit maximization, revenue maximization, cost minimization. But finally, everything will boil down to value or wealth maximization. Finally, it wants the shareholder, the main owner of the company, should become richer, wealthier. Okay. So all your actions primarily two: raising money and investing money. Raising money and investing money. Raising money into the business, investing money into projects which create value for the shareholders, and that, if profitable, first business can reinvest that profit back into the business. 1 second here. We can invest that profit back into the business, number one, or just a sec. Yeah. So the shareholder, the CFO, can reinvest the profit back into the business, or if he feels that the business does not require more of reinvestment, the business does not require more of reinvestment, they have got surplus money. In that situation, that surplus money can be transferred to the main owners, can be transferred back to the main owners, shareholders, in the form of dividends, in the form of buybacks. So ideally, lots of new concepts will be learned in this chapter. Okay. Then we'll be learning, after the basics, we'll be going through types of entity. So this is like the legal form in which you get registered, in which you operate. The way you register, the way you operate will decide your liabilities, your actions, your assets, your profitability. Okay. So this types of entity, it's kind of a very short view about what type of entities can get registered or can be operated. Like, on one side of the spectrum, we'll have a sole proprietor, a one-man show. That guy managing his whole business, maybe supported by few employees or maybe few family members. Then we'll move on to partnership. Partnership may we'll have variety, general traditional partnership, or the latest LLP, limited liability partnerships. Once LLP is done, we'll enter into the private limited and the public limited. So one extreme will be traditional, other extreme will be public limited. Just 1 second here. Yeah. Then we'll be learning about taxes. Uh, 1 second here.
I think you can change the settings to join anyone something.
No, I want that to be in my control. Yeah. And next time, today it's the first session. Na? Next time onwards, what we'll do, na, we'll uh, we'll have a staggered form of entry. Staggered form of entry means first slot will be 7 a.m., second slot will be 7:15, third slot will be 7:45, and so on. Ashok, that way is the people will be on time at least, and we'll be able to start. Correct? Otherwise, you
Okay.
understand, na? Yeah. Because we'll have a staggered form of entry. The first slot will be 7 a.m. when we start the lecture. Second slot 7:15, 7:30, depending on the crowd, and so on. So this uh, interruption on every sentence will stop at that time. Nothing against anybody. Okay.
Okay.
Second, guys, I have a Chrome extension over here of attendance. So uh, at the end of the lecture, I'll just take the attendance on that extension. So it will be saved there. It'll consist your name and the time you joined and all that. Third, please, for that attendance, please always join with your proper name. So don't use any other, as far as possible, do not use any other system so that I have access to your name. All right. Um, Third, before anything else, today's lecture will be till 10 a.m. It's a first lecture. I don't want to overhype it. We'll take only 3 hours for the day. And guys, it's an online lecture. So Kaustubh, Ashok, Tom, it'll be fun as I'm repeating. Dikshita ji, it'll chill lecture, relaxed lecture. We'll be having short breaks in between. You can cumulatively decide what time do you need a breakfast break. I'll be happily giving you that as well. Okay. Anything else you expect from me? Ria, Tom, Kaustubh, Sanya ji, Dikshita, Bhavani ji.
It's all right, no problem.
Yeah, thank you. So anything else you are expecting, you need, guys, be very comfortable in talking to me about any notes you want, any example you wish to have, any real life case study. Everything is fine. Okay, just ensure that we have a good communication. And again, I'm repeating maybe for the third time. It'll be fun. It's very interesting, and this is one of the subjects where um, scoring exemption, scoring decent marks is comfortable. Uh, 1 second. Scoring exemption is comfortable, not that much complicated compared to the other subjects. Moreover, here, here, one of the good side is it's a very interesting reading. Lots of things are happening around us. So, say for example, if we speak about the CFO, do guys please mute it, na, whoever it is. Yeah, thank you, Tom. So, if we talk about the CFO, if we talk about if we talk about the ESG criteria, the taxes, so everything is happening around us. So once we are, like taxes the other day in India, there is a stock called as ITC. It's a cigarette major stock, tobacco and cigarette major stock, right? So market is perceiving that on 1st of February, the budget day, the finance minister in the budget will start taxing this same goods higher taxes. So I think this will start falling into 40% GST category. Because of that, the final product, the cigarette, will start to cost more. Correct? And in that perception, if you may see, guys, if you may see, the stock has been falling. The stock has been falling steadily since the last 4 5 days. Guys, is this visible?
Yes, sir, it is.
In fact, if you may see, this is a yearly chart. If I may take a higher frame chart, you may see it's a beautiful story. Except for the COVID time, a little laid back attitude, the stock has been doing a smooth run, positive run, right? But but if you happen to see the last last 1 month and mainly focusing on the year 26. So it has not been kind to the stock. In fact, you may see from 400 levels, the stock has fallen to odd 340. I think yesterday it went to 330 or 8 odd as well. My point is not investing in stock. My point is how taxes started to impact the stock, how the external environment, government policy started to impact the stock. And those who were attending the lecture at the time, when we started just a minute ago, we were discussing. 1 second, dear. Yeah, hi, Kaustubh.
Yeah, good morning, sir.
Yeah, Kaustubh, hi. Kaustubh, you were there for Mumbai Center for the exam. Did we meet there?
No, sir. I was there at RRU.
RRU. All right. Happy to. Guys, just a general statement. Thank you, Kaustubh. I'm happy that you have joined on the video. It will be interactive. Lovely. Thank you. Thank you. Really, thank you. Bless you. And guys, everybody just keep it on mute so that the lecture is done smoothly. And whenever you want to speak, you can give me that hand raise, and it's very comfortable. Okay, be very chill with this. Yeah, Kaustubh, I was discussing how external policies are impacting the stock. And we just discussed 2 minutes ago that the main objective of the CFO is wealth maximization. So certain points we would like to interlink. Okay. With your permission, may I continue?
Yeah, sure.
This will be a very go-to. This will be a very go-to kind of a website for us, application or website for us, where we will be checking out various stocks, their returns calculation, their revenue, their growth. So multiple things can be calculated. This gives you quite a handy calculation of tools. Personal level pay when I invest, Matthew, Tom, a personal level pay when I invest, Abhar. At that time, one of the things I ensure is I do refer the stock over here. Okay, Kaustubh, the other day, thank you, Abhar. So whenever I want to invest into a category or particular stock, I ensure that I visit this website, I check the past fundamentals of the stock, try to see what cash is making, is the revenue growing, is it making profit. It gives you a quite a quick preview of what the stock is, correct? Moreover, if Kaustubh says I want to research more, then we have to get into annual report. Okay. So going back to the subject. Yeah. So as you see, we'll be learning basics. Then Unit 1 covers entities, taxation. Then we'll be getting into the sources of fund. Sources of finance is like 2 chapters, short term, long term, medium term. As the name suggests, from where all company, business can get money. Okay. So long term will be into categories of share capital and loans. Share capital and loans. Short term will be having a bank overdraft facility, trade credit, commercial paper, and so on. Longer term, we can go for a term loan or probably a leasing facility, some kind of loan arrangement, but for a medium term. All right. Medium term is usually more than 1 year, falls into category of less than 5-10, somewhere in the range of 5-10 years. Once we are done with the start unit, we'll be getting into capital structure and leverage. Now, what is this? Capital structure and leverage is more like what combination, okay, Kaustubh, what combination, what combination must the business finance? I mean, how much of external funds, debt, how much of owner's money, equity is best for the company? It's optimal for the company, correct? In simple word, what should be the leverage? Number 1, whether it should be levered or not. Number 2, if levered should be high or low, correct? So indeed, a lot has to be done with the life cycle of the company, life cycle stage of the company. Like Ashok, if you see young companies, the Shark Tank companies, young companies, you will sense that those companies are young companies. They are not making money. They are not making profit. They're struggling. They're struggling for revenue. They're thriving for the revenue. So the point is, that's why they are debt averse. They do not want to take more of debt. They're debt averse. They don't want to take debt. But if you happen to see quite established companies, they would be very open to taking debt. Common sense being, the companies are very comfortable in debt because they know they'll be able to make out some profit out of the money. And repaying the debt, redemption of the debt will be comfortable. Honoring the debt will be comfortable. Correct? So this chapter will teach us capital structure, debt equity, and finding the optimal mix for the company. Guys, all good? All good? Perfect. Perfect.
Yeah.
Thank you, Abha. Then will be another decision, dividend decision. Thank you, Ria. Dividend decisions. Thank you, Ali. Dividend decision is more like the company, out of its investing decision, has made profit. If the business needs to reinvest the money back into the business, if it has got more growth opportunities, you can reinvest it back into the business. If you need more reinvestment, if you have reinvestment opportunities, guys, 1 second. Just 1 second. Yeah. So, Ashok, we were discussing if the business has made profits, Kaustubh, so the first owner of the first truthful owner of the profit is the business itself. I mean to say, the business, if it is hungry, if it has got more growth opportunities, we would like to put money back into the business because finally the business should grow. Correct, Tom? But if after the growth opportunities are satisfied, still you are left with cash. Correct? You're lucky. You're still left with cash. So that cash can be returned back to the investors. Ria, it can be returned back to the investors in the form of dividends. So the chapter dividend policy will be discussing whether to give dividend, whether to give stable dividend or cyclical dividends. Correct? If no dividends at all and the business is left over with lots of cash, it's a bad usage of money. It's a bad decision. So in that case, at times company would like to go for a buyback, a stock repurchase agreement, a buyback. Okay. Fatima ji, Tom, Ashok, are we good to go? Ria ji, Ali? Okay.
Yeah, yes.
Okay, okay. Guys, is this too overwhelming? You want me to go with the rest of the syllabus or you want me to start with the chapter? Some feedback?
Sir, I think we should continue the overview of
Overview, no? Correct, correct. First time, we should know what the subject is. Thank you, Ashok. Thank you. Thank you, Kaustubh. So, Ashok, so once we understand dividends, then we'll understand a strategy called as mergers and acquisitions and divestitures. So, Kaustubh, on a lighter note, guys, keep it light. On a lighter note, when you say mergers, two or more companies coming together. On a lighter tone, we call them corporate marriages. On a lighter tone, we call them corporate marriages. Two companies coming together, wanting to live the rest of the life together, trying to create more value. Okay. And like marriages, the other word goes divorce. Correct. So here we call them divestiture. Divestiture is like demerger. Two or more companies trying to split. Okay. Demerger. Now, the subject will be very, very less on the legal side. Of course, our subject is not the law. No? We are discussing the reason why should a company be getting into merger. Why would the company be getting into acquisitions? Why would you like to acquire another company? Why would you like to merge with another company? Okay, Ria, Tom. So ideally, the mergers, acquisitions, devastator will teach you a concept called as synergy. Synergy, Kaustubh, synergy, synchronized energy. 1 + 1 greater than 2. Guys, I'm in the proper mind, don't worry. 1 + 1 greater than 2 effect. Ashok, that means coming together can create more value. And if it is creating value, then coming together makes sense. Come on, all good? Guys, all good? Correct? The other day, I was reading that two of the quick service companies are getting merged. If I'm not wrong, it is Burger King and which one? I can't recollect. Somebody Google it out. Burger King, Devyani International, and one more. One is handling KFC in India. Other, is it Domino's? Somebody please Google. The other day I was reading, these two companies are trying to merge in India. Correct? A few years ago, we had a big time merger where Vodafone and Idea got merged. The merger reason was survival. Yeah, Kostu. Yeah, Kostu. Please, please.
Yes, so it is Devyani International and Sapphire Foods.
Sapphire Foods. So ideally, see, they must have seen something, right? They must have seen something, a reason for merging, right? So we'll be learning those reasons. Why are the companies merging? Tom, get that. Fatima, get that. What's the reason to get merged? So guys, we have never met and I'm just reading out your names. So if I pronounce it wrong, you can just correct me or you can accept it. Okay. So just keep it light. Guys. Nothing against anybody. Okay. Moving ahead. So reasons of mergers, then short-term financial plannings. This is more like working capital financing. How to finance the day-to-day needs of the companies into inventory, receivables, payables, and all. All right. So very, very light-hearted chapters. Okay. This, although it's printed, it's not the part of the syllabus. So totally ignore this chapter. Behavioral finance is not the part of the syllabus. Then we'll move on in unit 3 to little bit of accountancy and technicalities. So accounting terminologies and little overview of regulators like RBI, SEBI, PFRDA, IRDI, IND-AS. So here we'll be using some kind of accounting jargons. Then we'll learn who is a regulator and what are its duties. Okay. Kosto could be, sir, are we learning accountancy? No, we are not learning accountancy. Then why should we know accountancy? That's a good one. Kosto, as an actuary, you might have to at least check out balance sheets at some time. You might have to deal with an accountant sometimes. You might have to deal with an income statement sometimes. So the point is now, we as an actuary should know what the accounting statements are and who has what duty. Correct? So no doubts, we are not learning chartered accountancy level finance, accountancy rather. But yes, we need to know because finally accountancy is the language of the business. Ashok, Tom, accountancy is the language of the business. If we are not accustomed to understanding those terms, then although we are superb in statistics, we are superb in risk calculation, superb in provisioning, just a little tweak in the language of accountancy and the other guy can fool us. Guys, I hope you get that, right? So on our part, we should be understanding the business by understanding the accountancy, straightforward concepts. Come on, all good? Guys, perfect. Moving on. Thank you, Ali. Thank you, Dikshita. Thank you, Bhavani. Bhavani ji, thank you. Really, thank you. Then we'll be learning a little bit about annual report. I'll try to show you the annual report. Rather, we will see the annual report. Correct. Yeah. 1 second. Yeah. So rather, we will see the annual report of certain companies. I usually go for the most popular company of the hour. So, a few days ago, I was teaching a similar lecture to a batch. So we took ITC annual report. Okay. A few months ago, we took Infosys annual report. So my point is, I love to take company in which we are most interested. Okay. So we'll go with the R. Whatever company is most discussed at that time, we'll go with that company. Moving ahead. Then is the calculation of some accounting aspects. So we'll be learning how to make profit and loss statement, balance sheet and cash flows. Non-commerce student, maybe a significant chunk, 50% usually is a non-commerce student, right? Anybody is from non-commerce here, don't be scared at all. Those who wonder, sir, but we are not from commerce, doesn't matter. We won't be teaching you debits and credits. We won't be going for that basics, but yes, we'll be learning how to make an income statement, how to get it scrolling ahead. Okay. So yeah, there we'll be learning final account, balance sheet and cash flow statements. Okay, if you just want to have a look here, like if we go with ITC again, guys, whenever you talk about a company, we would like to see its profit and loss statement. What is it making here? You can see on screen, right, guys? Then we would like to see what does the business owe and what does the business own. We call it balance sheet, correct? We would also love to see where is the cash coming from, where is the cash going. So it's flow of cash flow statement, categorized into 3 activities: operating, investing and financing. So primarily we'll be learning how to make these 3 statements. Again, I'm repeating, we are not expecting us to become geniuses over here. but a quite decent working knowledge needs to be done. Come on, quite a decent working knowledge needs to be have. Are we clear? Nice. Are we clear? Perfect. 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 Fatima, thank you. Ali, thank you. Ria, thank you. Very nice. Lastly, we'll be learning how to analyze the company. Analysis of the company is more like we have to learn certain ratios calculation. In fact, if you pay attention, at the start itself, they were giving us ROCE, return on capital employed, book value per share, the PE multiple of the stock, the return on equity, very important, the dividend yield ratios. Correct. Ashok, this, like, I'll tell you, ratios will be more like trying to understand 2-3 metrics in one calculation and thereby trying to judge whether things are improving, if at all, where they are improving, what's the reason of improvement, if they are deteriorating, what's the reason of deterioration. Correct. So ideally, whenever an investor, like I'm presuming everybody here must be watching few episodes of Shark Tank, you must be sometimes scrolling for investment strategies. So there will be certain calculations which are predominantly true. When you invest or when you evaluate a company, those calculations needs to be learned. Okay, so all those calculations we'll be learning for internal as well as external analysis. Nice. All good? All good? Perfect, perfect, perfect. And towards the end, we'll be learning cost of capital. Guys, this chapter is extension to the chapter capital structure and leverage. This chapter, capital structure and leverage, and cost of capital are two sides of the same coin. Those who wonder, how is that, sir? See, capital structure teaches you what capital combination is optimum, right? Cost of capital will teach you what is the cost of that combination. I mean, you have raised money in the optimum cost. Correct. You have raised money in a combination. What is the cost of that combination? Money is not free. There is a cost, what you have to bear, right? So what's the cost of that calculation? Are we clear? Or cost of that combination, my bad. Perfect, perfect. Thank you, Oath. Thank you. Yeah, thank you, Bhavaniji. Thank you. So on your part, Kaustup, we would learn that cost of capital. And lastly, towards the end, we'll be learning the appraisal, the project assessment appraisal. This is very, very similar to what you have learned in FM. You're done with FM, right? I remember in your semester one, you had FM, right? So this will be very similar to what you have learned in FM. NPV, IRR calculations. Cost will be, you will reteach us, not at all. Why would I waste your time? But I would ask you to calculate this time the data which used to be given by the professor. What I'm trying to tell you, last lecture's FM, you got a training how to calculate NPV IRR, correct? In this lecture, NPV IRR, I will not train you. You are already good in that. We'll rather tell you how did the cash inflow and outflow arise? How did you come to that calculation? And once that calculation is done, we'll start to do NPV IRR again. So it is like a prequel. Hello, it's more like a prequel to the chapter. Students, are we done? Okay. The certain chapters, guys, you might be aware, the external paper is of 60 marks, rest of the internals 40 marks. Guys, there are certain subjects which are very certain chapters which are very critical. I'll tell you where. I don't want to scare you off in the first day. There are certain chapters which are just MCQ and little bit theoretical based, right? So yes, it's a fun reading, correct? It's a lot of detailful reading and you will enjoy. Anything else you would like to talk to me now, guys? Kaustubh, Ashok, Tom, Riyaji. All right. Thank you, Kaustubh. Kaustubh, we'll take a 2-minute rest on this. Post that we'll continue. Acha, thank you, Abhar. Kaustubh, I don't know how it goes with others because it's more like a one-way communication. So shortly, I need 2 minutes rest in between water break and so on. Correct? Acha, you can collectively tell me what time do you need a breakfast break? 9, 8:30, whatever you need, 8, 8:15, 8:30 types, 15-20 minutes ka break. And today I told in the beginning, everybody who has joined late, that today's lecture will be only till 10 a.m. Number 1. Number 2, next time onwards, we'll have staggered entry. Staggered entry means one slot will be open at 7. Next slot probably 7:15 or 7:30 types. 7:15 is fine. I think I should not harass you much. Okay, Ashok, first slot 7 o'clock, second slot 7:15, then 7:30 and so on. So anybody is late, so no problem. We'll just have 15 minutes and then you will be entering. It's not a punishment. Honestly, it's not a punishment. It's just to ensure that the tick happens on time. We don't get disturbed frequently. All right. Riyaji, Ali bhai, all good? Okay. Acha, Kaustubh, Ashok, I'll try to have the entire lecture in English. I think there could be a language problem. But if at all anybody feels that, sir, sometimes you speak in Hindi because it's the mother tongue, na? Sometimes I might spill out. So you can just raise your hand and ask me again. Don't worry at all. I won't take it as anything bad. Okay. Don't never worry about that. Anytime you need extra example, you need concepts, be very, very comfortable. Are we good?
Yes, sir.
Yes.
Yes, sir.
2 minute break. I'm in front of laptop only. Just 2 minutes rest. Then we'll continue. Yeah. Thank you. You guys have still not told me the breakfast time, huh? The main break, 15 minute, 15, 20 minute break. You have still not told me the time.
So we can take it at 9 to 9:15.
So I'll keep the 8:45, 9 o'clock bracket open. Okay.
Okay.
Yeah.
Okay.
Thank you. Okay, guys, shall we continue? Kaustubh, Ashok, Tom, Riyaji, let us
Yes.
start. Hi, Kaustubh. Yeah. So,
Yes,
thank- so here's your chapter one. As I told you, I hope you can see the see the file PDF, guys. Correct? It's visible.
Yes.
Perfect. Perfect. So, students, chapter one, basics, guys. Number one, remember the CFO is primarily concerned with decision making. The two decisions, what is his entire life, is number one, raising, number two, investing. Raising is more like financing. The chapter capital structure, leverage, cost of capital will teach us what combination is good, optimum for the company. And the chapter sources of finance will teach us the subset, I mean equity, debt, preference, short term, long term, and so on. When you say investing, putting up the money, investing is more like putting money into good use, into good projects, thereby trying to create more value, more wealth, more wealth. In the FM terminology, accepting those projects which have positive NPV. Correct. Indeed, in the lecture, we give importance to both. But practically speaking, amongst both the decisions, this is the superior one. Kaustubh, amongst both the decision, in actuality, the superior one is investing. Tom, Kaustubh, should be, sir, logic. What's the logic behind that? Logic is pretty straightforward. See, think of it this way. Tom, think of it this way. What if you went wrong? Let's turn the table. What if you went wrong? Bhavaniji, what if you went wrong? So, Ali, if you went wrong in financing decision, that means probably you wanted to take more of leverage, you did not take more of leverage, yeah, vice versa. You had to take less of leverage, you took more of leverage. The undoing or managing this decision, indeed it's tough, but it's not like not manageable at all. It's not a taboo. It can be managed. Correct? But imagine you were not supposed to take a project and you took up the same. For a Sanya, for a common man from a modest background, Ashok, for a common man from a modest background, in his life, buying a flat, a residence flat, a property in which he's going to live, he's going to thrive. Kaustubh, you can imagine how much important that decision is in your life, my life. Correct? Imagine that kind of importance this decision has in the life of CFO. If it goes wrong, it can be too costly. And at times, the whole life could be a problem. The whole business could be bankrupt. All right. So going for a bad decision, bad investing decision could be honestly a very, very serious and a severe crisis decision. Okay. Remember, the final objective of a CFO is always wealth maximization of the shareholder. Correct? But if you say, for example, if I say that in my business, I have appointed Kaustubh here for financing, Tom here in investing. So Kaustubh's role will be to raise the money in such a way that the overall WACC, weighted average cost of capital, the overall cost of capital is minimum, lowest. Whereas Tom's role will be to identify those projects which will create good value, great value for the company. Are we clear? Ashok, Tom, Bhavaniji, Riya, perfect. Thank you both. It means a lot to me. Thank you. So this is your chapter 1 ka initial start. Come, let's start. So anything, what is finance? Anything and everything to do with money. Anything and everything to do with money. So basically, what do you do with the money? You kind of spend it, you kind of collect it. So basically, financing and investing. And after the investments have generated returns, first the return can be reinvested. And if the reinvestment needs are taken care of, you still have got surplus, then the returns can be distributed to the investors, the stakeholders, shareholders, in the form of dividends or buyback. All good? Riyaji, all good? Bhavaniji, Tom, Ashok, fantastic. Okay. Then let's get into the reading. What is finance? Finance can be understood as a function of business that involves money circulation, extension of credit. Money circulation is the rolling of the money. Extension of credit is more like selling goods to customer on credit. Selling goods to customer on credit. The provision of banking services, how to use the bank services. At times you want to use OD facilities and so on. And of course, most important, the process of making investment, evaluating good quality projects which will give positive value to the company. Finance has many faces. So giving one concise definition is difficult. So what you will learn will be corporate finance. Then there is another aspect, capital markets. That is under the role equity market, bond market, long-term money. Then there's another aspect called as portfolio management. So here you talk about the returns, the risk, the beta, and so on. Correct? So all this are covered in the finance, just broken down into corporate finance, capital market, and portfolio management. Come on. All good? All good? Okay. Kaustubh, Tom, something I always tell my offline students also, Ashok, is if you want to write down with me, I'm okay with that. Preferably what you could do, these notes kana, Ashok, you can take print. Okay, you have got access to this. You can carry a print with you. And whatever I write, you can write besides them. Okay. Ideally, don't go for a concise print, a blank. I mean, quite some space area will be needed to write stuff. Okay. So my suggestion to you will be chapter wise have this photocopies with you so that you can write it along with me. You want to write some points along with me, it will be good. Number one, refer this. Number two, I'll speak with the office. I'll speak with Vishal and Aman sir as well. So try to refer the past papers, correct? Number two, of IAQS as well as IFOA, correct? Number three, if possible, go with the CB1 book of the relevant chapter. You will have the CB1 mapping. Which chapter of CB1 is covered at IAQS. So ideally, that mapping will help you to understand which chapter to cover to what extent. Ashok, so by that, if you go na, so honestly, things will be smoother for you. Okay. But the first thing is, I indeed would like to say, keep the photocopy of every chapter so that whatever points I make, you can write along. Because all these slides, na, I cannot guarantee that you will get the annotations what I have written. Because this is on my personal laptop. At times, if something happens, then I cannot take the accountability of it. So get my tone, yaar. Correct? Ideally, accountability that I'll be able to deliver the annotation back to you. So please keep the photocopies ready so that if you want to make some notes around it, some examples around it, you will be able to make it. Don't make, do we want to refer acted or the CB1? CB1 should be good. CB1 should be good. But initially, na, do we need CB1 to that extent? No. The first thing should be IAQS notes, lectures, past papers. Extra mein CB1 book. See, you are not specializing in finance, you are learning it. So extra is CB1 book. Your other subjects as an actuarial professional are more important. I mean, Ashok, how much ever interesting this subject is, this is never going to be your bread and butter. Understand? So put effort to get exemption. See, I'm not disappointing you. I'm spilling up the truth. So ideally, put effort to gain exemption, score decent, but don't overdo a subject which is not going to be a bread and butter. Bhavaniji, Tom, Bhavaniji, Ali bhai, all good? Kaustubh, comfort? Yeah, 1 second. Yeah, 1 second. Thank you, Ashok. Ashok, so we learned ideally money is about circulation, credit giving to the customers, banking services, and evaluating good quality projects. What is finance? Now, this is the very, very important slide. Okay, focus higher. See, here's a CFO. Here's the investor market. Yeah, investors. Here's the business. Now, let's say a character. Let's say Tom plays the CFO. Costo is the investment officer of the company, CIO, Chief Investment Officer of the company. Sanya, Ashok, probably Ali, all these are investors. Okay. So let's say Costo is the CIO. Costo tells Tom that Costo has come across a very beautiful projects which will have a positive NPV. The project requires an outlay expenditure of 1000 CR into real means real assets means physical tangible asset like property, plant, equipment, machinery, and so on, somewhere to the tune of 800 crore, plus maybe some patents, the intangibles, maybe spending 200 crore. And Kostub is telling to Tom that, look, yeah, the project is awesome. And if we raise 1000 crore, it will be a fantastic project for the value of the company. So Tom, who's the CFO of the company, is questioning Kostub, what do you need from me? Kostub replies, I need 1000 CR. That's it. Now it is Tom's role to raise from the capital market 1000 crore. So Tom issues securities, issues financial securities, like probably Sanya is the ESC, equity shareholder. Ashok buys debenture. Let's say Ali buys preference share. And of course, when they buy these securities, Sanya is buying equity of the company, Ashok is buying debentures, Ali is buying preference share, Sanya is buying ESC. Now the question is, they have to give money to Tom. Now, in Sanya, Ashok, and Ali's world, they are now owning certain financial assets or financial securities. They have given the money to the CFO. CFO will then give the money to the CIO. CIO will now buy these assets. Correct? Assuming, and of course, CIO will put this money into place, proper assets. Assuming the business made profits, Ashok and Tom now has to wonder what to do with this profit. Should this profit be reinvested back into the business? Reinvested for survival, for growth? Always remember, you say survival first. For survival or for growth. And if this is taken care of, should this extra surplus profit be returned back to the investors? This is the life of Tom, the CFO. Guys, some feedback. Thank you. Everybody, did you understand? Kaustubh, Tom, Bhavani ji, Priya ji, Ali, Ashok, did you understand? Thank you. So guys, if you wish to copy this, go ahead. Else, on this slide, I have tried to make it in a pictorial way. Guys, here's the manager. I think this was Tom, who is a mediator between the financial market and the firm. The firm needs money. It invests into the project. Tom issues security, gives the money. Investors give the money. That money is invested. That money yields money. Their cash generated. That cash can be returned back to the investor or reinvested back into the business. Hello, guys. If you may, Ashok, if you may, mine was a better drawing actually with the characters. So because it's your first example, I hope this will help you to imagine stuff. Kaustubh, Ashok, if you want to note this down quickly. Many times, Tom, that is the CFO, and CIO, Kaustubh, these both duties are shared by the same fellow. I mean to say, there need not be two fellows. If the business is not that huge, then the CFO itself will take care of the investing decision as well. I hope I'm making sense. Just Ashok, for classroom purpose, I try to have different characters so that their duties can be assigned very steadily. Abhar, Ria, Ali Bhai, Bhavani ji, all good? Guys, I need feedbacks here. Okay. Are you still writing?
Yes, sir. Just a minute.
Yeah. Tell me when it is done. Tell me please when it is done. 1 second.
Sir, just a question. Wanted to ask what's the PSC which you've mentioned for the investors?
Manav, it is preference share capital. Manav, now think of it like, Manav, uh, in the legal sense, share capital can be of two categories: equity share capital, the true owners, and preference share capital. They although are share capital, but they are not the true owners of the company. They are to be given a fixed reward called as a fixed dividend. Okay, so in legal sense, yes, they are the share capital, but not in sense of equity. Manav, if you don't take it personally, can I give you an example?
Yes, sir. Sure.
Manav, for example, my full name is Harshvardhan Rana Saria. Okay, my surname is Rana Saria. I'm a Marwadi. Okay, now Manav, I live with my parents. Okay, my mother, father, my wife, and my son. Okay, and we all share the same surname, of course. Correct. Ashok, other than we five living in the same house, due to maternal relatives, I've got some uncle, aunt who share the same surname. Okay, so they share the same surname. It applies to all of us, right? Kaustubh, other than this, I've got some friends as well. Of course, we don't share the same surname. Okay. Now, Kaustubh, I threw a party the other day. I threw a party. Okay. And I invited the friends. We don't share the same surname. Those first cousins, second cousins who share the surname, and of course my family, the vertical blood, the stream I share. Okay. Ashok, now unfortunately, the food is short. I did not expect so many people arriving for the party. Okay, so the food is short, and I'm a good host. Kaustubh, I will not first feed myself. Okay, I'm a good host. So could you please tell me whom should I feed first, whom should I feed second, and whom should I feed third? Priority wise.
That preference shareholders, because they are like a, because we have to give for more preference, give it to these
Yeah,
people
yeah, yeah.
because they are like a lenders. Like
Tom. Stick to the story. Perfect. Stick to the story. So can I say I would feed the friends first? Second, the siblings who share the surname because they don't live with me. And lastly, I'll feed myself and the family of mine. Come on. Tom, perfect. Correct. In Tom, you're comfortable, right? I mean, I interrupted. Are you okay?
Yes.
Yeah. Thank you. Kaustubh, the first guys were the debt. The second guys, Manavai, second guys, we shared the same surname, but they were given preference. Yes, they are the share capital. Yes, I am also the share capital. I'm the equity share capital, a true owner, a true risk bearer. And those were, yes, share capital. We had the same surname, but they were given preference share capital. Manav, I hope you get the point. So
Yes.
legally, we share the same surname. Law says he's also the share capital. We share the same surname. But for all behavioral purposes, he will be treated as an outsider compared to the equity owner. Behavioral purposes. So, Manav, if you let me continue, for all legal purposes, Tom, this will add value to you. For all legal purposes, the preference share is a share. For all for all behavioral purposes, one second, Tom, one second. For all legal purposes, no problem, I understand. Ashok, for legal purposes, preference share is the share capital. For all behavioral purposes, he is as good as an outsider, debt. Behavioral purposes. Ashok, legally insider, behaviorally outsider. This line is absolutely okay to be mentioned anywhere. You write the paper or you speak with people. Absolutely okay. For all legal purposes, the preference share behaves like a share. For all behavioral purposes, he starts to behave like an outsider. Very cunning people. Ashok, very cunning people. Are we clear? Correct. Manav, did this answer your query, dear?
Yes, sir. Thank you.
Tom, would you like to speak? You were saying something? Okay, I'll take that as a no.
I just say that preference shareholder is just like a lender, no? Because
Yeah,
they
yeah,
want
yeah.
a fixed rate.
So behaviorally, just like a lender. Behaviorally, legally,
They are
he's still,
shareholders.
they are shareholders. Legally, they are shareholders. And
But
there is
the residual shareholders,
equity.
because residual shareholders got a lesser preference than preference shareholders, right?
Absolutely correct. There is a waterfall structure. Waterfall structure means who will be given money first, who will be given residual, who will be given the last. The residual, the final money is always to the equity. Correct. So the true risk bearers of the company is equity. Hello. All good? All good. Sure. We'll take a 2-minute break on this. Kaustubh, just a 2-minute rest. Then we'll continue with the next slides. Yeah. Thank you.
Yes.
Kaustubh, continue, shall we? Ashok?
Yes, sir.
Abhar? Yeah. Okay, thank you. Okay. Let's have a look at this slide. Very interesting slide. Okay. Every business needs real asset. Real, when you say, categorization of assets into financial assets and real assets. Okay, those who understand financial assets. Look at this example, please. From the investor's perspective, when they bought, like Sanya, Ashok, Ali, when they bought this equity preference debenture, again repeating, from the investor's perspective, these securities play a role of financial assets to the investor. Come on, yes or no? Correct? Kaustubh, correct? However, when you talk from the point of view of company, the property, plant, equipment, machinery, land, building, receivable, all those assets with the company are real assets. When you use the word real assets, those are the assets which will be exploited. Ashok, exploited. Exploited in a good sense. Exploited means utilized. Utilized to generate revenue, thereby profits, right? So, when you categorize the assets, assets can be broken into real assets and financial assets. Real assets are those which are used to generate revenue, to generate profit. Financial assets are those which, kind of tells you, gives you ownership of a particular right. For example, when I buy, yesterday, Ashok, Reliance was down because of that refinery issue, Venezuela and that crude oil. So, Ashok, I bought a little stake in Reliance. Little stake. Come on, I'm not that rich right now, at least. Ashok, so I bought little stake in Reliance. So that's a financial security for me. Thank you, Ashok. Thank you, Kaustubh. Financial security for me, financial asset for me, correct? But suppose if Reliance buys some refinery, some plant, one second here. One second. Yeah, all good. Yeah, sorry. So suppose Reliance buys some plant, some asset, some property, some equipment, some machinery, correct? That will be treated as real asset. So when you categorize, assets can be treated as real assets vis-a-vis financial assets. Okay. Business puts busy when you, Ashok, when you give money to Reliance, to ITC, to Infosys, you are giving them money to buy real assets. Because see, Kaustubh, you yourself cannot see, like for example, Kaustubh, it's me, Harsh sir. Okay. My full-time profession is to teach, right? Full-time profession is to teach. But Ashok, other than that, I do a little bit investment, correct? Little bit counseling. Now, try to appreciate, when I do investments, I am investing into some company, let's say ITC, TCS, whatever. So indirectly, by owning the financial asset, I am owning some part of the real assets. But I cannot claim those real assets, right? I am the owner of the financial asset. Guys, I'm so sorry to confuse you. Is this clear? Guys, correct? So in this example, if you appreciate, thank you, Oath, means a lot to me. If you appreciate Sanya, Ashok, Ali, they had access to financial asset. Whereas these guys, the company, had access to real assets. So every business needs real assets, tangible or intangible. Non-commerce people, when you say tangible, these are those real assets which can be touched, which can be felt. Intangible, you cannot touch them, but yeah, you can feel them. How is that so? Like, for example, brand, customer loyalty, patent. These are those assets which generate value. For example, like Ashok, like for example, when there is a brand associated, like for example, the other day I was buying Wrangler jeans, correct? Ashok, sometime, check day, paycheck day, so people like to splurge, okay? So I was buying Wrangler jeans. And I was like, wow, it's a 4,000 rupee jeans. And just to remove the Wrangler tag out of it, it's now an 800 rupee jeans. Correct? So that 3,200 rupees I am paying for that cowboy. Those who appreciate what I mean. Abhar, Bhavani ji. Correct? So brand creates value. Brand created a brand, helped the business to generate consistent revenue. And because of the brand, the business could sell the 800 rupee item for 4,000. It helps to have generated consistent revenue. Moreover, it helps to increase revenue per price per unit. Guys, so I cannot see it, but I can feel it. Kaustubh, Abhar, Tom, Manav, Bhavani ji, all good, lovely, lovely, lovely. Thank you. Any question till here, we'll be glad to answer.
This Kingfisher, that Kingfisher has got the brand value, got a loan from that, no?
Yeah.
And
Logo.
that's
That
the
logo
problem.
also, the logo also had value. The Kingfisher logo on their airline, even that had a value.
They
Correct?
got money, they got brand value, they got a loan, no?
Absolutely.
Then they got
And Tom, here we recognize why. I mean, I'll tell you, guys, it's hanged. Hello, can you hear me?
Yes, sir, you are audible, but your screen and video.
I think internet is down. 1 second, I think there's some problem with the net. Guys, 1 second, even my laptop is hanged. Just bear for a second, it'll be okay. Guys, can you hear me now? You can hear me, right?
Yes, sir.
Image bhi acha hai, nahi? The hang is good.
Yeah.
Acha. Chalo, not an issue. Guys, even my laptop is not working. Just give me 1 minute. I think it should refix itself. So, Tom, we were discussing.
We lost you. Or is this my internet?
Students, are we there? Hello, can you hear me?
Yeah, now we can hear you.
Yes, sir.
I don't know what happened. My system got hanged, but it restored itself. Thank you. Ashok, are you aware of what has happened? I am not good in tech. Anybody understands what happened so that I can tell my laptop guy that something happened?
And if we see, we can tell you.
Of course, what I saw is system shut, update virus protection. Virus protection is out of date. Tap to click. Okay, I think there is some virus issue. Okay, I'll try to get it updated. Thank you. Okay, Ashok, sorry for the trouble. Yeah.
No problem.
So
No problem.
yeah, we were discussing. One second.
So your screen is not visible.
Yeah,
You might have to reshare that.
it's sharing. Yeah. All good?
Yes, sir. Good now.
No. Okay. So we were discussing that every business needs real assets. That's the tangible and the intangibles. The tangibles, as we mentioned, property, plant, equipment, intangible, patent, brand, logo. Somebody was talking, I think Tom was talking about the logo where people could get loans around their brand value. Other than the loan aspect, that's a wonderful observation. Other than the loan aspect, uh, it helps you generate more profits, more revenue, correct? And that's the reason I we all see personally companies spending a lot on creating their brand, consistent advertising, trying to give good quality, trying to give customer satisfaction, correct? So Ali bhai, ideally both are important. One observation, Tom, one observation I would like to share with you. I think I got this data from some research where it was mentioned that post 1980s and 90s, the proportion of intangible assets is increasing in the businesses compared to tangible assets. I'm not saying one particular business. Ashok, I made a general statement, correct? Ashok should be, sir, it is logical because if you say 80s, if you incorporate all the business of 80s and 90s, those used to be the days where businesses used to be more on the manufacturing side. Correct. Now, yeah, manufacturing still survive, but today the outlier businesses, the ones which are giving outlier returns, are the tech business, the Nvidias, the TCS, the IT companies. So these businesses, the ownership is around the intangibles. The main ownership is of intangibles, their technology, their asset, their patents. Come on, all good? Correct. So over a period of time, it has been observed that the proportion of tangibles is lowering and the proportion of intangible assets is increasing. Come on, all good? All good. Thank you. Thank you, Ashok. Thank you, Kaustubh. Moving on. Moving on. Thank you, Oth. Okay. So every business needs real assets to generate profits from its core products and services. Real assets that can be used in the normal line of business to generate profits are tangible, intangible. Tangibles are like building, property, plant, equipment, machinery, land, building, and so on, so on. Intangibles are like brand name, goodwill, trademark, patent, etc. Okay. Financial asset. Guys, I think because of the restart, I have lost the annotations. But if you remember, here I had drawn, uh, there were three fellows who had got access to equity, preference, and debt. And from those investors' point of view, these were financial assets. These were financial assets. All good, na? Ashok, Kaustubh, all good, na? Perfect? Yeah. Okay. Financial assets are assets of the capital providers. Rather than the company raising finance, I mean, they're assets of the people, in our story, the people who provided finance. Correct? Like the shareholder, the bondholder, debenture holder, convertibles. Correct? Convertibles we'll discuss in due time. Today is not your lucky day to understand convertibles. We'll learn it in due time. It's a little advanced product. Come on, all good till here? Ashok, Kaustubh, Ali, Riya ji, Bhavani ji, all good?
Yes,
Perfect.
sir.
All good.
Thank you. Okay. Guys, at personal level, I would like you all to read this slide and then we will discuss. This time we'll play reverse. You read it, we'll discuss. students, how is the slide? Comfortable?
Yes, sir.
Yeah. Okay. Let's have a quick reading. To carry on the business, the companies employ real assets, tangible, intangible. To acquire this, company needs money. Finance manager stands between the operations, the diagram which I had drawn, correct? Finance involves two basic issues. What real assets to buy? So that's about investing decision. Where to get the money? Financing or raising decision. First question, where to put? So that's the head of a controller. So it's a controller function of a CFO, where to put the money, correct? So he'll be calculating various projects, working with the marketing team, working with the other teams, and trying to get those projects which will create more value, correct? Second question, where to get the money from? That's the responsibility of a treasurer. So the treasury function, other than looking for the bank, looking for the company's cash, it's also looking for raising more money and maintaining good relationship with the bank stakeholders, so that in future if they need money, the hassles are lower. Responsibility of the financial issues, guys. MCQ, very important MCQ. The final responsibility will lie always in the hands of the board. So the non-commerce student, it is for a company structure, it is the shareholders are the true owners of the company, but because they are too scattered, they appoint board of directors who manages the business. The board then delegates. They'll have managers, and these guys will operate on day-to-day basis. But the final responsibility is always in the board, because the shareholder will hold these guys accountable of anything wrongdoing over here. Hello, Ashok, makes sense now?
Yeah, understood.
Perfect. So this is a very important slide. I would like you to please reread this. And Ashok, fundamentally, we have been discussing this since 7 a.m. More or this is a new point, which I believe this diagram might have helped you to understand. Okay. Please read this slide well. Any point, any doubt? Controller function is the investing decision. Treasury function is the raising decision. Have a look.
Sir, isn't it the CEO's responsibility also?
The CEO is responsible for everything, but you have to appreciate. See, when we is it Ashok? Ashok, was it your doubt?
Yeah.
Ashok, see, the tag CEO gets into Chief Executive Officer, correct? He is the person who will be questioned by the board, correct? But when we categorize, a subject as business finance, so we will be presuming the company CEO is different from CFO. Okay, the CFO, Chief Financial Officer, will have two main decisions: raising, that's the treasury, and the investing, that's the controller. In many situations, companies have the same CEO and the CFO, correct? But categorically, if something is, see, when you delegate, Ashok, for example, Ashok, listen to this one. Okay, I'll make it very, very silly. Keep it light, okay? Keep it light. Ashok, if the business finance lectures are bad, okay, I'll take it to myself. If the business finance lectures are bad, correct? My mistake, I mean, whom will you hold accountable? You as a shareholder, customer, whom will you hold accountable? IAQS or Harshvardhan sir?
IAQS.
Perfect. And who will IAQS catch as Harshvardhan sir?
Yeah.
I hope you get the meaning.
Yeah.
From the shareholder's perspective, they will catch the BOD. But the BOD has delegated the work to the CEO, CFO. So the hiring, firing role will be from BOD to the CEO, CFO. I hope you get that.
Yeah, I got it.
So the sentence is a POV, point of view sentence.
Shareholder's point of view.
Exactly. From shareholder point of view, it has to be BOD. Lovely, lovely. So Ashok, we have to understand, like Ashok, if my lecture is bad, so you won't complain to me indeed. You will complain to Akash sir or Aman sir probably. Come on, guys. That's how it works, right? That's how the world works. Nothing shame in that. That's how the world works, right? So ideally, you will hold BOD accountable. BOD will catch the CFO. Guys, come on. I made it simple. I made my lecture bad. Come on. All good? Abar, thank you.
Yeah,
Thank you. Thank you. Thank you.
lecture is also good, sir.
Oh, thank you. Thank you. You made my day. Thank you. Thank you, Kaustubh. Chalo. Moving ahead. Yeah. So this is, guys, it's a very important slide. In the CB1 curriculum book, there is a lot of discussion around this. You please pay attention to this slide. So if you see, there is a weighing scale over here, which is trying to weigh the risk and the reward. And trying to make you understand the financing decision, which is the treasury decision, versus the controller decision. And certain things, certain aspects of their decision making, so that the risk reward payoff is justified. So, guys, there are risks involved and there are mitigation strategies. So remember, whenever you talk about investing or projects or business, indeed, there will be a lot of risks involved. We do not, I repeat, we do not entertain into minimization of risk. We entertain into management of risk. Okay, Tom should be, sir, it's sounding counterintuitive. You are not minimizing risk? No. We are managing risk. Tom, just let me complete, then we'll discuss. All right, Kaustubh? When you say risk management, minimization is one aspect of management. Okay, guys, just let the slide end. We'll take the breakfast break. Okay, listen. Minimization is one aspect of risk management. Now, your question should be, sir, what are the other aspects then? See, the risk management aspects are reduction, acceptance, transfer, avoid. There are certain risks you would like to reduce. There are certain risks you would like to accept. There are certain risks you would like to transfer. There are certain risks you would totally like to avoid. Ashok, if on day one itself, you guys, students, learn that risk minimization is the objective, then what are you doing here? Why don't you put your all money into fixed deposits? Into government bonds? Abhar, Ali, Ria, are you getting my tone? Bhavani ji?
Yes, sir.
Correct? Abhar, ideally, a businessman is supposed to take risks to make money. But he is supposed to take those risks which he can efficiently manage, which he is well versed with. Correct? There will be certain, thank you, Abhar. There will be certain risks which is out of the box. For that, there is insurance. There are derivative products. There are certain risks which he does not know how to manage. Question is then why do you take that role? Why do you take those risks? You could have avoided that. Correct? There are certain risks which can be reduced by having minimal exposure to those risks. Correct? So what I'm trying to infer is risk management can be understood, can be broken into reduction, acceptance, avoidance, and transfer. Certain risks are to be mitigated. Certain risks are to be accepted. That's the purview of the CEO and the CFO of the company. Hello. Ashok, Ali, Ria. Now there is nobody to talk to me.
Understood, sir.
Thank you, Ashok. Thank you, Kaustubh. Moving ahead. Then, guys, timing, financial analysis. So when you did the NPV calculation, indeed, it's about timing of the future cash flows, which impact the NPV as well. Correct? And lastly, but not the least one, the problem is everybody involved in the decision-making process is a partial guy. Is a human. He's a biased fellow. And what we want always is the decision making should be unbiased, should be as much possible unbiased. Abhar, Ali, try to appreciate. Just giving you a silly example. Ashok, I'll just give a silly example. Abhar, like for example, today in the morning, we had a 7 a.m. lecture, right? I'm taking the lecture from my home. It's a work from home for the morning session for me. Okay, 7 a.m. lecture. Thankfully, Aman sir, Akash sir did not ask me to go to the Andheri office and take lecture from there. My point is, if suppose I am not delivering good lectures from my home, being on the lazier side, I have not prepared well, I'm not speaking well, maybe the mic is not good, maybe the system is not good. That's because the guy is impartial. I would still love to take, that's because the guy is biased, partial. I would still love to take the lecture from my home. Why is that so? Laziness, who will travel? But from office's point of view, from businessman's point of view, they would like to have best quality sessions, irrespective whether I have to travel or not. The decision making always has to be unbiased, because if you leave the decision making in the hands of the biased people, they will not think from the company's angle. They would rather think primarily from their own perspective. Hello. Abhar, very nice. Abhar, imagine.
Yes, you get it.
Abhar, I would like IAQS to open its next branch next to my building so that I don't have to travel. But they should get students for that, na? Come on, guys. If the people involved into the decision making are biased, the decision itself might not be optimal. So we would like to have always that decision making process which is objective oriented, final objective, wealth maximization oriented, and such that it is biased to its minimum. So ideally you keep unbiased people, and if you can't have unbiased people in totality, so at least open up their biases, Tom, open up their biases forefront, so that when they speak we can recognize that this is the bias of the guy. Riya, Bhavani ji. Thank you, Bhavani. Thank you. Means a lot. Thank you. Abhar, Ali, thank you. Kaustubh, thank you. It's a very important slide. I would like you to read more of this from the CB1 curriculum. Okay. Very important slide. Okay. Okay. As promised, we can take a 15-minute break for having breakfast. And post that we'll meet 9 o'clock. Guys, I had communicated today at the beginning itself that lecture will be till 10 o'clock. Okay. And next time onwards, we'll have staggered entry. Kaustubh, Ali, all good? Okay.
Yes, sir.
Thank you, Bhavani. Thank you. All good. Thank you, Abhar. Break time. Thank you. Guys, shall we resume?
Yes, sir.
Yeah, all right. Chalo, let's continue. So, responsibilities for the financial decision, as we remember, the final responsibility is always of the BOD. I think Kaustubh and me had a discussion around this. Ashok and me had a discussion around this. Correct. So, responsibilities for a financial decision. The first question, that is financing, investing decision, is always of controller. The second decision, money investing, was of the treasury. However, capital budgeting decisions, that means investing decisions, are tied to various aspects: production, product development, research. And the CFO, the finance guy, of course, need not be expert on all these things. Hence, he will seek cooperation from various specialists. The second question is the responsibility of the treasurer, that is the financing, who looks after the cash, raises capital, has maintenance of relationship with the investor community. Responsibilities of the financial decisions finally will lie with the board, and board usually delegates the matters, small and medium sized matters, to the CEO, CFO and managers. Guys, straightforward reading. Students, straightforward reading.
Yes, sir.
Yeah, 1 second here. All right. Everybody, are we there? Kaustubh, shall I continue? Manav, Ali? Yeah. Okay. Ali, what's a capital budgeting decision? So the way you did in an NPV, you used to evaluate a timeline. On zero date, there used to be some outflow. Then you used to project the future cash inflows. Then, by using appropriate discount rate, we used to find the present value of inflow. And if the present value of inflow is greater than the present value of outflow, the NPV will be positive, which would mean the project is creating value for the company. Correct? The most important rate will be this discounting rate. You call it interest rate, I call it discount rate. This has to be appropriate. Now, when I use the word appropriate, this has to justify, number one, the business risk, the risk of the project. Number two, the leverage, the financial risk. If the project has taken leverage, if the project has not taken leverage. So the discount rate will depend upon the business risk and the financial risk. You should take this one down somewhere. Proceed, may I? Kaustubh, proceed, may I?
Yes, sir.
Okay. So capital budgeting is a process of finding the best projects that will create long-term value for the company. The importance of capital budgeting is due to the complexity, because anything goes wrong, it can be a terrible decision. It can even cost bankruptcy to the company. Things go wrong that way. Now, this is more of a long-term decision, long-term investment. So it's talking about the real assets, the tangibles, the intangibles. This needs to be supported with the working capital. The working capital is more like the regular capital, the working capital, consisting of current assets and current liabilities. Now, see, if you talk about a plant, a building, a machinery, equipment, indeed, that's a huge expenditure. But associated to that, you also have to work about how much to put in raw material, how much credit to give to the customers, debtors, receivables, how much will you be able to purchase on credit, creditors, trade payable. If you happen to see over here, students, if you happen to see over here, look, Vastu, we get to know that ITC gives a credit to its customers of almost 20 odd day. Debtor day means its customer pays in 20 days. Inventory days means how many days it takes its inventory to get manufactured and sold. If you see, they're doing quite good. They've reduced the days significantly. That means it takes lesser time for the goods to get manufactured and sold. That means less amount is tied up in the inventory. That's a good decision. Days payable is how many days does it take, ITC takes, to pay back to its supplier. So it usually, you can see somewhere 50-60 days ka period, right? So this defines your working capital. If you go to the balance sheet here, you can see the other assets consisting of current assets, the other liability consisting of current liabilities, and collectively this decision that how much should be stuck in the raw material, how much should be stuck in the finished goods, how much credit to give to the customer, how much credit facility should we get from the supplier, it's called as working capital decision. Indeed, even this is an important decision, but Kaustubh, just personal question. Kaustubh, where do you live, Kaustubh? Where do you live?
Yeah, I live in Indore.
Indore, fantastic, lovely. So unfortunately, few bad reasons. Otherwise, the city is good. Unfortunately, some bad things have happened. May God bless them. Lovely place. Poha is awesome. Kaustubh, other than the MSc, are you working somewhere? Are you doing something else?
Yes, sir. I am into insurance sales.
Excellent. Kaustubh, daily basis pay when you leave your home or wherever you live, do you keep some cash with you?
Yeah.
Of course. Can I know the amount if it is not personal? Like if I tell you my figure, when I leave, like I stay in Mumbai and the IAQS is like 1.5 hours away from my home. Okay. So when I leave for IAQS, roughly I carry 2,000-3,000 rupees in my pocket. Card, mobile phone, and that UPI facility is separate. But 2,000-3,000 cash is normally there with me. I don't know why do I keep that. 700-800 rupees also fine. But 2,000-3,000 rupees is there with me. So how much money do you carry on daily basis, dear?
Apart from any work,
Other than the
like,
work, other than the work,
it is 1,000-2,000 rupees.
1,000 rupees, 1,500 rupees. Can I say this is a regular decision? I mean to say, you don't need any huge mathematical science to decide how much cash to keep on daily basis. Correct? Like you, me, we don't need much of a science to decide how much cash to keep on daily basis. Business also does not need much of intelligence to decide how much cash does it need for working capital decision, because it's a regular decision. For you and me, how much cash do we carry? How much money do we keep in our saving account? How much money do we keep in our FD, in our current account? Like, it's not big of a decision. It's a regular decision. Correct? Same way as how much money does a business needs to keep in the working capital? It's a very normal of a decision. Come on, all good?
Yeah.
Comfortable? Perfect. Perfect. Okay. Moving on. Moving on. So investment in working capital is largely routine, a regular decision, and very few complications are involved. So fixed capital, that's about the property, plant, tangibles. They will always involve complex choices. It's a tough decision. There'll be always choices. Choices as in alternative assets to invest into. So NPV will be good criteria to evaluate which one is better for the company. When to commence? So sometimes date of commencement is critical for tax planning. Methods of financing, whether to take leverage, whether to have more of equity, whether to have debt, equity, preference, or to go for short term or to go for long term. We have to check the liquidity in the capital market, liquidity in the money market. Hello, all good? Hello, all good?
Yes, sure.
Correct? So investment in fixed capital, investment in working capital. When you say fixed capital, it's about the property, plant, equipment. It's a very important decision. Anything goes wrong here can be a terrible decision for the company, may even cost bankruptcy at times. These choices are both complex and critical. And the scope for making the wrong decisions, the penalty could be very, very high, especially in the fixed capital. Working capital mistake can be managed. Moreover, fixed capital outlay sometimes will have a serious bearing on the direction, on the growth, the pace of growth. Correct? As such, they determine the opportunities open to the firm and the directions in which the firm will move if they choose the opportunity timely and fine. Please read this slide, take your time, absorb it. We'll discuss it again if you want. Students, any feedback for the slide? Have we understood? Kaustubh bhai, Riya ji, Manav,
Yes, sure. All good.
all good? Comfortable, na? Guys?
Yes, sir.
Okay, okay. Next, continue. Guys, progress in this decision also depends upon applying logic. Yani ki experiences, what we have learned from the past. And investment decisions are no exception. Even there you have to apply what you have done in the past. Like history repeats in pattern, trends repeat in pattern. So if you have learned something from the past, you better apply it so that you can utilize it to make money out of it. Hello, may I continue? Guys, may I continue? Guys, may I continue?
Yes, sir.
Ali, Azhar? Yeah, thank you. Guys, come on, react, yeah. You guys are feeling tired. Come on, react, continue. Yeah. So even when it is impossible for the financial analysis to improve the actual fortune, see, a good analysis, everybody, a good analysis is a support function. A great execution is where money is. Please listen. With my experience of life, Kaustubh, I'm telling you, you could have a wonderful plan. You could have wonderful ideas, great ideas. But unless they are implemented fine, you do not make money out of them. Kaustubh, it's pretty sad, but it's the ugly truth of life. I don't remember the exact proverb, but they say ideas are dozen a dime. That means plenty of people must be having thousands and thousands of ideas. But money is made when it is executed, the risk is taken, and it is optimized. Correct? So it's not just about analysis. You could be very good in analysis. You could be doing an excellent modeling, financial modeling. You will be presenting companies. But the point is, when you execute, how much conviction you have, how much money you put, how much patience you have will decide how much wealth you will create. Remember this line, sir? It's very interesting. Provided time will teach you what I said today. Okay? Ashok, in a positive context, it's not about the calculation. It's about the execution, the patience, and the conviction you have in that. Are we clear? Kaustubh? Abhar? Perfect.
Yes.
It may nevertheless be, analysis helps you to identify risk in the project, highlight the salient feature, the important features, possibly such as the methods by which this risk can be reduced. Guys, have a look at this slide, a very technical slide. Guys, comfortable, tired, Kaustubh, clear, Abhar, Manav,
All good.
all
All
good.
good.
Yeah, thank you. So financial analysis will also need ideas and help from marketing team, technology. Because see, the guy, Kaustubh, if you see by profession, I'm a chartered accountant. Okay, by qualification, I have good expertise on the subject of finance. But if you ask me, sir, do you have any access of technology? Abhar, few minutes ago you saw my laptop had crashed, and I was requesting you all to help me out. Kaustubh, I'm not good in technology. I need support. I might not be in marketing. I need marketing team's assistance. Matlab, whatever plans you make, it sounds good on the Excel sheet. But when you will work upon this on ground reality, there is a team to manage it. There will be different dimensions. You need to take support of all of them. What say? Common sense, na? Common sense, na? Perfect.
Yes, sir.
Perfect. Perfect. Continue. The finance manager, the finance managers are the ones responsible for the financial health of the company. Correct? The finance manager stands between the operations of the company and the market. To the market, if you remember, it issues the financial securities like equity, preference, debt. To the firm, it gives money. Money is used by the CFO to buy the real assets. Real assets are utilized by the company to generate profit. Profit can be reinvested back, or else it can be distributed to the shareholders. Correct? I think this slide we are. Guys, have a look at this slide, please. Important slide. Testable in paper. Guys, this slide particularly tells us, again, repetitive slide, the treasurer is mainly concerned with the financing decision, mainly concerned with raising money, maintaining relationship. The controller is concerned with the investing decision. And other than that, he's also responsible for preparing of the P&L, statements, tax filing, and audit work. Students, I think at the beginning I told you both the functions are the part of CFO, just breaking it up into two heads, the treasury function and the controller function. Come on. All good? Hello?
Yes, sir.
Perfect. Kaustubh, all good?
Yes, sir.
Yes, sir. Continue. Check this slide. Do you want some help? Guys, the manager, the CFO, acts as a mediator between the markets and the company. Company needs money, manager issues security, raises money, money is given to the company purchases real assets, utilizes the assets to make profit. Profit can be reinvested back or given to the investor in the form of returns. Feedback, please. Riya, Manav, Ashok, Ali Bhai, Tom. All good? Any doubt till here?
No, sir. So
Cost-
just one
Please.
question I
Yeah,
had.
thank you.
Yeah, so sir, if a CA is a CFO of the
CA, a chartered accountant.
yes,
Thank you.
yeah, so he will perform every other function like both of the treasurer and the controller.
You're asking this? Is this the end of the question? Ria?
Yeah, it was the question.
Ria, listen. See, Ria, you have to understand that the bigger the firm, the more of a specialist they would like to appoint. Like Ria, I am a chartered accountant, but if you ask me to do taxation work and I'm not a specialist into it, I might step back. But if you ask me to do the audit work, I would love to do it. I'm trying to tell you something. Sooner or later, people built up specialist functions within their main heads. Clear? For smaller entities, one guy could be playing multiple roles. But as the entity becomes bigger, you need specialists handling the department. Ria, am I making sense to you?
Yes.
Perfect. Now, Ria, extending this explanation, number one, to become a CFO, you need not be a CA alone. In fact, isn't any qualification mandatory to become a CFO. Yet, chartered accountants are preferred for legal and other compliance related work. Number two, a CA can be an expert in financing, in investing, both, or maybe even none. He could be only expert in taxation and so on. My point is, qualification doesn't push your expertise ahead. It's a very, Ria, as a professor, I'm not happy while saying this, but this is the fact of life. Okay? Is the query answered, Ria?
Yes, sir.
You don't look. Ria, did you come to Andheri Center for the exam? I remember two ladies had come. I think one was Sanya. I don't remember the other one.
I was there in the Andheri campus.
Dikshita, yeah. Dikshita was there. Right. Dikshita, I remember signing. Yeah. I'd come to your table. recollect that. Yeah. Okay. Thank you, Dikshita. Thank you. Ria, all good?
Yes, sir.
Comfort? Okay. Abhaji, Kaustubh, any other question?
No, sir, it's all good.
Kaustubh, you're looking very disappointed.
No, not
At
disappointed.
7 a.m., your energy was high. Time for insurance selling.
My phone started ringing, so
Kaustubh, I'll tell you, if you understand into a coded way, 9:15, my also attention gets diverted a little, if you get what I mean.
yeah, I understand. Mine also. Notification pops up.
Yeah. It starts, correct.
5% down, 5% up, like that.
So, Kaustubh, happily, guys, just sharing. I'm happy that I share that vibe with you. Abhar, I was also checking up on markets. Abhar, I was also checking up on markets. Happily that Reliance is little up today. Yesterday it was 5% down. So happy to see Reliance up today. Took a
They
little.
clarified that.
Sorry, Abhar.
They put up a post regarding the clarification about the Russian thing.
Yeah, yesterday only but market did not react yesterday to that. Today, happily the market is up. But unfortunately, in the metal space, profit booking has started. So we might see all those metals and all which flew in the last 10-15 days to stabilize a little. Silver is down, lead is down, aluminium is down, copper is little profit booking. So just Kaustubh, see, the fun of the subject is now, I will not be able to give you the whole aspect about the stock market or the capital market. But trust me, I'll be trying to abide that certain correlations are there which we can use, and intention should be pure. I'll say something beautiful. Ria, marks should become a byproduct. Your intent should be money making. If you get what I mean. Correct? Manav should be, sir, marks to mil hi jayega. Marks to I'll find anyways. Correct? Cost of correct now. Marks to where it will go. If you know the concept, well, where can marks go? Correct? My main intention should be money making. Correct? Cost of, other than the actuarial domain, by qualification, I also teach certain CA and chartered accountants and CFAs. Correct? So there, of course, see, you understand the subject overlap is there, na? Derivatives, fixed income. So in certain lectures, na, if we have discussed certain stock, if we discuss certain stock, and in a week or so that stock gives 2, 3, 4% return, right? The students are like, within L1 or within L2, our fees will be getting recovered.
Yeah.
So they start to calculate the payback period. Okay, chalo, thank you. I'm so happy that the batch is so mature to understand all this, that all this concept will be related to stock market finally, right? Because if you remember, lecture I started with the first objective is wealth maximization. Yeah, it was not marks maximization. It was wealth maximization. Riya bolegi, sir, no, my objective is marks maximization, exemption intake. Okay, that's a correct objective as well, at least for the time being. Okay, chalo, Riya ji, let's move on. It's a very important slide. I presume we have done this 3-4 times since the morning, and I think it's pretty clear. Goal of a financial manager. Guys, very important slide. Have a reading. We'll discuss it. Have a reading, please. Very important slide. Guys, all done? Hello?
Yeah, sure.
Kaustubh? So, Kaustubh, the goal of the financial manager, final objective is always wealth maximization of the shareholder, of the main owner of the company. However, associated goals, to achieve this, it might want to have revenue maximization, earnings or profit maximization, and cost optimization in order to finally achieve wealth maximization. I mean, there could be at times, this may sound, Dikshita, Riya, this may sound counterintuitive, Abhar, but at times there could be conflicts. That means maybe you want to reduce the cost, but reducing the cost, sorry, maybe you want to reduce the cost, but reducing the cost, sorry, reducing the cost might impact the long-term value for the company. Giving you a very silly example. Kaustubh, just relate this. Kaustubh, anybody's biscuit fan over here? Abhar, Dikshita, anybody biscuit fan? Ria, Kaustubh, morning breakfast. Kaustubh, am I okay with poha or any other biscuit or any other breakfast would you like to? I mean, just a
No,
snack.
poha is fine. It's OG.
OG. Do you relish your tea with a biscuit? Anybody's with the biscuit? I mean, I just want
Really.
nobody. Good. Actually, fine with this. So if I just extend this example, imagine I'll take myself. Normally, I get a student for this. Because my morning coffee, I would like to have some 2-3 biscuit pieces just to relish it. I'm a Britannia fan. Okay, Good Day is the biscuit I go for. But imagine I love the cashew flavor into it. Now imagine if Britannia, just using its name, Britannia, if it plans to reduce its cost, the first thing it could do is replace the cashew maybe with the groundnut or maybe with some other item which is cheaper. Maybe replace the butter with palm oil. Also, the dirty factors over here, this will indeed reduce the cost. But a person or the customer who used to relish that taste and used to buy for that, you might lose the customer in the end. So a cost minimization, if it leads to customer leaving you, thereby dropping of the revenue, thereby dropping of the brand, the cost minimization was a poorer objective. It was a short-term objective which led to a long-term loss of value to the company. Come on. Is this clear? So there could be at time condition where a short-term objectives sounds too good, but could be damaging the long-term wealth maximization. That's why from the morning, I have been consistently saying that wealth maximization is the main objective. The rest are associated. And they should finally boil down to wealth maximization. Are we clear, brother?
Yes, sir.
Dikshita, Ashok, Riya, all good? Perfect.
Yes.
So this slide is trying to relate that. The needs of the shareholder will vary according to the factors such as attitude toward risk. Some shareholders might be risk averse, some might be risk seeker, some might be risk neutral, some would want to take risk. It would differ based on time preference, consumption needs, whether are they interested in today's return or future. So anybody shareholder interested in earlier return would love the company to pay huge dividends. Any shareholder interested in long term, they would be happier that the company does not pay dividend, reinvest the money and generates lots of capital gains. Therefore, they'll be interested in income, that's dividend, or growth. Some people would like to also check the tax position. Wherever they are taxed lower, they would prefer that kind of source of income. Like, if I am taxed lower in dividend, I would force the company, as a shareholder, I would force the company, give lots of dividend so that I pay less tax, I can enjoy more of money. Hello? Ashok, Manav, all good? Okay. How can managers, directors acting as agents, very important word, for the ultimate owner, satisfy the desire for these owners? Guys, I think we are getting into agency. Yes. We are getting into the agency part. I think, Kaustubh, I think too much we have done for this day. This session, I would like to continue in the next lecture. I think, correct? I think quite good concepts we have learned today. In the next lecture, I see this chapter ending and we have done significantly good. I hope you enjoyed the chapter, enjoyed the subject, correct? Next reading, we would like to continue this. Next reading this. Oh, lovely. Bhavani ji, thank you. Kaustubh, next reading will wind up the chapter. Just give me 1 second. I'll take the attendance. 1 second. Okay. So I've taken the attendance. Thank you for this. See you in the next lectures. Bye. Enjoy the rest of the day. Thank you. Bye-bye.
Yeah. Thank you, sir.
Thank you.
Welcome. Bye-bye.
Thank you so much, sir.
Thank you. Bye-bye.